thank you for stopping by and watch my market report. I am Mike, and a little bit about this report is we talk about mortgage rates, what drives them on a daily basis, and what they're doing on a daily basis. We don't get so much into specifics of interest rates as there's plenty of other sites you can go to on that. But however, we can talk a little bit about the trends. There's just too many variables from that go into interest rates, from loan programs into your credit scores, property occupancy. And blah 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 down the right side there. So we don't really get into specifics on there, but we'll talk a little bit about trends where things are going in those parts. We do touch a little bit on stocks as they can correlate with the bond market or mortgage-backed securities, which is what drives mortgage rates. A little bit about myself is I'm a mortgage lender. I do. Um, I do work with a national lender, so if you guys got questions about mortgages, mortgage rates, if you got questions maybe or looking for help in terms of refinance or getting pre-approved and maybe buying a property or financing a property, please feel free to reach out. We'd love to be able to talk to you about your scenario and how we can help you out. So without further ado, let's start with the report and start with the economic report of the day. Uh, as you can see here, we got actually a very good day in terms of what uh, we would expect for two important data here. The first is the jobless claim, so we get every Thursday. Last week's number was revised higher, as you can see. Initially, it came out 770,000 people, revised higher to 781,000. Forecast is supposed to dip down to 730,000, and it actually dipped below 700,000 for the first time in quite a while, in probably about a year, at 684,000. Now, obviously, this is still not a great number because we were seeing only about 200,000 prior to the COVID, but from if you're looking at from the COVID on, this is a very good number. It's the first time we've actually came in less than 700,000. Now, finally, we got the GDP, the final revision for the fourth quarter. It came in at 4.1% initially. Forecast con to be unchanged, and it came a little hotter at 4.3%. So good deal in terms of the GDP for the fourth quarter ending there. We'll touch on the 7-year auction. This will have some importance on the treasuries, and we'll see how that's affecting it. So meanwhile, let's start with the headline news. Stocks are up this morning. It liked the data, obviously, but however, we're seeing some quarter ending from the big hedge fund guys repositioning or rebalancing their portfolios. We'll also see some, big retirement, like in Japan, they'll be starting their new fiscal quarter April 1st. So we could see some movement in those areas as well. That could help out mortgage-backed securities or bonds, as a lot of the retirement like to use a more safety or flight to quality in terms of investment grades. And usually bonds and mortgage-backed securities, yields, treasuries are usually that fill those gaps. Something that will help out. We'll also see helped out with the yields was more lockdowns are happening in Europe. They had a spike in their COVID, so a lot of the governments over there are showing a little bit more lockdowns happening over there. So let's take a look, see how this is happening with mortgage-backed securities. So we were up higher in the day, mortgage-backed securities. The 7-year Treasury did kind of hurt us a little bit. It came in kind of poor. We'll see the yields. We were up. We first opened up right about here, up probably about 6 basis points. We're up even about 14 total. So if some lenders may have come out sooner and maybe in position to reprice for the worst. We'll kind of watch this. Currently, we're only about 2 basis higher than where we left off yesterday. And as you see, we did dip even below there at one point. But again, some lenders may reposition themselves into worse pricing, but I haven't seen anyone coming out with changing pricing yet. So if you're going to look at just the chart where it is now, a lot of lenders could be coming with rates unchanged from what we saw yesterday. Now here are yields. This is what we were talking about yesterday, that we were breaking below this little line here. We need to see if we can keep that right now at 0.626 or just under 1.63. We want to try to keep under this line. If we can keep this under, hopefully this can hold. This can help us give bonds more room between the 25-day moving average and this line to maybe see some more improvements in our mortgage rates. So again, this is when that 7-year Treasury came in, we started worsening and breaking above that. So hopefully we can get a little pushback on that. All right. So if there's any again, mortgage rates, I'm going to say unchanged for the most part, but it could change as the day goes on. Stay tuned. We'll see you guys in tomorrow's report. Thank you so much for watching. Take care.